Hi guys, how are you? My name is One Titanium. Welcome back to IMMT. Let's talk about what's going on in the markets end of the week. I made a video a couple of days ago and I said, listen, don't worry about this move down. Fundamentally, the economy is fine. Don't think that this is going to start falling apart and it's game over, recession is coming, and so on. Why? Because fundamentally, we have 3.7% unemployment headline, and then you look at the prime age labor force because that's the one you really need to focus. You don't need to worry about 16-year-olds and retirees and well-off people. Forget about them. It's the prime age that matters, 25 to 54, and that's at 3% right now. Okay, that's almost a historical low. So the economy, is in the longest job expansion in history, and we are soon going to be in the largest economic or the longest economic expansion in history. Okay, you look at the JOLTS number. JOLTS are -1, historical lows. What does that mean? What is JOLTS? JOLTS is there's more jobs than people looking for jobs. Okay. You look at the U6 number, which is 7.6. That's almost a 30-year low. Okay. It's lower than it was in the 90s. So that's doing well. Inflation numbers came out 2.23 headline and 2.17 core. Right. There's no inflation in sight. So when you see the 10-year rising, you gotta wonder, like, okay, why is it rising? There's no inflation in sight, right? So um, when a lot of people are going to talk about the flattening yield curve, and every other time, it proceeded, a recession proceeded. You know, it's different this time, and I'll tell you why it's different this time. See what happens when the yield curve flattens out. Uh, they lend at the long end, and they pay savings in the short end. Okay, and when the short end and the long end start to flatten out, banks don't have an incentive to loan out money. This starves the economy of cash and ultimately leads to a recession. Now, why is it different this time? Well, it's quite simple. Deficits are increasing. We're at $900 billion deficits. Okay, just to give you an idea, we were 500. We were less than 500 just a year ago, 2 years ago. So you're not really going to starve the economy of money, right? It's being offset by deficits, lower taxes, increased spending, and that money flows into the functional economy. Once that money goes through the functional economy, it ends up in the savings bubble, is what I call it, the savings bubble. So when it gets in the savings bubble, what happens? That money has to go somewhere. Nobody's going to go take those profit savings and put them underneath their mattress. What they're going to do is they're going to go invest that money. Where they're going to invest it? Stocks, bonds, real estate, and so on. Okay, even though real estate is a little soft right now, and but to understand fundamentally what's going on behind the scenes and then compare that to the charts is the best way to invest, and that's what we do. So, like I said, broke the previous low, time to buy, don't panic. Sure enough, we got the bounce. We're back into the structure of this bigger channel. Okay, right in here. This structure right up here, what we call a thin, thick, thin. This is thin, this is thick back up, and then thin. Now, this is, you can call it double top, I call it an M pattern, whatever you want to call it, I don't care. The point is that it usually leads to the downside. Okay, it goes much lower. And then once it complete, it comes back up. Now, how is it going to come back up is what we care about. And is there going to be a 1, 2, 3 down? Meaning that we're going to get something like this. If it does something like this, then we can take this one short then. Okay, um, that would be our next um, position to short. If it doesn't, if it does the opposite, if it continues to come down like this, okay, something like that, then we're going to want to take it long. All right, I kind of screwed that up, but you get my point. All right. So don't chop yourself up chasing up and down, getting in and out, and so on. Just let it do its thing. Let it go. Don't be rushing. Now you look at the NDX, then you have to look at fangs. And FANGs did the same thing, broke the previous low, stayed within the longer term channel, came very close to testing it, bounced. Okay. Now, again, it's the same thing. How is this going to form? Will it start doing something like this? Then we can take it to the upside. All right. We can add to our long position. We'll have to wait and see. Okay. Don't rush. Don't chop yourself into noise. All right. You take a look at the VIX. Where's the VIX? For all intents and purposes, VIX is done. Okay. When the VIX starts to spike, it doesn't wait for people. And if you look at it back here, for example, right in here, right, it doesn't wait for anybody. It just takes off. Everybody's chasing. If it starts to wait, then that means it's done. All right. If you come over here, it looks like it's done. It's consolidating. Consolidation means fear is going away, and we're looking for lower VIX, which means higher stock prices. Same thing here. See it? Everybody was chasing. Once the VIX goes, doesn't wait for anybody. So again, be aware of these things. They matter. Be aware of the fundamentals. Um, they matter. Okay. So that's it. I won't get into it too much more. New York Stock Exchange, NYSE. Can we say this is a 1, 2, 3 down? You know, 1, 2, 3. Yes, I would like to see it test the previous low. I think that would be a little bit better to complete the pattern, but we're not there yet. So we'll see next week how it's going to form. Again, don't start chasing. Don't start chasing. And the bias should be to the long side. There's nothing wrong with the economy. Therefore, the stock market is not going to start collapsing. I'm telling you that now. It's all an opportunity to buy. All right, unless there's a sucker punch somewhere we don't see, some 9/11 event or something hidden that nobody knows about. Uh, we're going back up. All right, at least test the previous highs. So that's it, guys. Take care of yourself, and I'll talk to you soon. Bye bye.